Welcome back to the channel, my fellow traders and investors. So the S&P 500 just did something major technically today. Along with that, Tesla stock just reported earnings and soared and is now crashing. These are just a couple of things that we're going to be discussing in today's video, where I'm going to be giving my thoughts on the ongoing situation and whether this so-called rally can continue. And let's not forget an important technical breakdown of the overall market, because it's been playing out exactly how we've been predicting on this channel. So without further ado, make sure you've subscribed and let's jump into the video. Alright, so I quickly want to go over Tesla's earnings and why I think we're seeing this crash to the downside after that initial rally to the upside. And then I want to break down what this means for earnings going forward, as I've been talking about in my last few videos. So taking a look at earnings real quick, they were honestly not that bad. EPS was $2.27 versus an expected $1.81. Revenue is where, they missed. But the big thing here is that automotive gross margin came in at 27.9%, down from 32.9% last quarter and 28.4% a year ago. Now, if you've been following the markets, the major news going on is inflation. So it's kind of obvious that it was really going to dig into their margins and have an effect with these higher costs. But again, like I mentioned, it was expected that inflation was going to impact these manufacturing companies. So why is the stock dropping? Well, I do want to mention one other thing before I answer that question. We can see that Tesla has kept its soft guidance for 50% average annual growth in vehicles over a multi-year horizon. So things honestly don't look that bad if they're still projecting future growth. What I think this really is, and what I think the reason for this initial drop to the initial rally and push back down to the downside is the fact that things are still uncertain. What do I mean by that? Well, when I say things are uncertain, that's really what I mean. The Russian war is still causing supply chain issues. Same thing in China, with outbreaks and shutdowns are causing even more problems in the semiconductor space. So these problems don't seem to be resolved anytime soon. Now, the second thing that I want to mention is that uncertainty regarding interest rate hikes. Yes, Tesla was able to pull in good amounts of profits this quarter, but that's all because they were able to raise prices while consumer demand was still strong. And so I can definitely understand why investors might be looking at this and saying, I'm not sure if Tesla can really deliver on their promises with what's going on in a potential recession in the making. And so definitely, as I think once we start getting more clarity with the upcoming Fed meetings and advanced GDP numbers coming out literally the very next day after the Fed meeting on the 27th, I think from there on out, and once a lot of earnings have come through, then from there I think the market will really make up its mind, because overall these earnings weren't that bad. They were pretty good. It showed that Tesla was still able to maintain that profitability. They still indicate that future growth is still intact, but I think that uncertainty is going to halt any major moves going forward, and that's something that I've been warning you guys all about for the last few weeks. So those are just my quick 2 cents on Tesla's earnings and what I think about overall earnings going forward. I highly recommend you watch my last video as well, where I really break down this market rally a little more in depth. But now I want to jump into the technicals of the S&P 500 and the overall stock market, because the stock market just made a major play and move today, and I want to discuss it and where the market could be heading from here. But before we do jump into the technicals, if you haven't already, be sure to go get my book, A Technical Trader's Handbook, on Amazon, which is the #1 hot release in public finance. Alright, so jumping into the technicals of the SPY, which is an ETF that tracks the S&P 500 on a 6-month daily chart. The S&P just did something major, but I don't want you guys to get too caught up in it, and I want you guys to be cautious. Now, the reason I say that is that yesterday I told you guys how the S&P caused a major break and a major close. As we can see, we had this previous level of support here at about 391.5, where we were bouncing, but we ended up turning into resistance every time we pushed up, shorted back down. But yesterday, as we can see, was the first time in a long time that we were able to close above this level. That essentially shows that buyers were really strong and that sellers simply didn't have the volume and the pressure to force that close below that level. And so that buying strength was super good. Now, what I told you guys that I wanted to see is that I wanted the S&P 500 to break above this level, pull back, and validate that previous level of resistance as support. The reason that validation is so important is because it basically is telling us that, hey, us buyers were strong enough that even if you sell or short it back down, we will buy at these levels and we will force the stock back up, right? It's essentially mind games, right? Let's just put it that way. And we can see today, if I go to the daily chart, we can see how entire pre-market validating that level of support before boom, pushing up higher to the upside. So great to see. But one thing is that I still don't see this as a major sign of a reversal. The reason being is of the candle we formed today. Today we formed someone off along like a doji, right? As we can see, we formed a doji with a long top wick and a long bottom wick. This essentially shows consolidation and indicates a potential reversal, right? We can see right over here, we formed a doji after this downtrend and then it reversed higher. Here we formed a doji during this uptrend before that reversal lower. And similarly, we're now forming another doji. So what I am expecting if I go to actually the 1 month hourly chart is potentially for the S&P 500 to pull back down again. But what I need to see is it validate this level at 391.5 as support. I definitely believe with the candle that we formed today, it's very likely that we could actually end up breaking down to the downside and pulling back. And if we break below this level, I think it's very likely that we could see a pullback all the way down here to 382.5, where we had this previous level of somewhat of support and in a sense resistance in this area. So I think that's very likely if we break below. That's why I think it's going to be key to continuously monitor this trend and if we can get a follow through higher. Now I just want to show you guys a quick example of what I mean by follow through. As we can see way back over here, we had this downtrend, right? Initial downtrend consolidating, basically similar thing that we're seeing right now. And we can see right over here, we closed above. And again, we formed that doji candle. And even though we closed above, we weren't able to get any follow through, right? We weren't able to continue that upwards trend. We simply just hovered around here and began crashing back down. And so until we get that, I would personally be a little cautious on buying too heavy. So with that being said, guys, that's the technical overview and a little bit of a fundamental overview of what I expect with earnings going forward as well. Be sure to check out my last video for a little more macroeconomic analysis as well. But all in all, that's the video. Be sure to go get my book, A Technical Trader's Handbook, on Amazon if you want to level up your technical trading and become a little more profitable. And with that being said, I'll see you guys in the next one.